Okay, and now let's move on to the insurance sector. Now, sources are telling CNBC TV 18 that we are seeing some bit of insurance regulator is concerned about the share of the business that they are gaining from bank insurance channels. Yash is joining in with us to give us more details on that. Yash?
Well, Vinny, very recently, of course, we heard the finance minister as well as the IRDA chairman speaking about the concern on mis-selling or forced selling through banks or bank insurance channel as far as insurance products are concerned. What we've been given to understand from our sources is that mis-selling or forced selling is not the only aspect which concerns the insurance regulator. It is also the concentration of business which insurance companies are having as far as banks are concerned, something which is concerning the regulator at this point of time. What we've been given to understand is the essential concern is that if potentially something goes wrong with any of the banks, then it could impact the business of the insurance company. And if that happens, then of course policyholders of the insurance company as well as shareholders of the listed ones could get impacted. What we've been given to understand with respect to what the regulator is doing about it, they've asked the insurance companies to gradually reduce the share of banks or bank assurance as a part of their total business. That is one thing. The second thing is that they've also asked these insurance companies to reduce the share of their parent bank as a part of the total bank assurance business. As far as the total share of the bank business of total business is concerned, IRDA seems to be of the view that it should be less than 50% of the total business. As I said, the share of parent banks needs to come down. What we've been given to understand is that the IRDAI, which is the insurance regulator, is expected to monitor the situation in terms of bank share over the next few months. If it does not come out, then the regulator could also look at providing a glide path to the industry in terms of bringing down the total share of banks business as a part of the individual APE to less than 50%. The second one, also the IRDA would monitor and could consider putting a cap in terms of the share of the parent bank as a part of the total bank insurance business. Just to give some numbers in terms of what is the share of banks business into insurance companies, HDFC Life gets 65% of its individual APE through banks, SBI Life gets 58%, Max Life gets 52%, ICICI Prudential at 29% and LIC at 3%. These numbers are for H1 FY25. Now, what is more concerning is the share of parent banks business as a part of the bank insurance business. For SBI Life, that stands at 95%. HDFC Life through HDFC Bank stands at about 80 to 85%. For Max Life through Axis Bank, that stands at about 90%. ICICI Prudential through ICICI Bank stands at about 50%.
Okay, Yash, thank you so much for that update coming in there. So sources are telling us that RDAI is showing that they are concerned about concentration of insurers, a business dependence on bank assurance. So keep an eye on that. Thanks for that. But let's move on.